Hey, good morning, everybody. Mike and Steve here, and welcome to the Ankerstar Wealth Morning Show. Have kind of a quick show for you today with three topics. The first of which is, as you know, okay, maybe you don't know, but I certainly know, because it's starting to consume more and more of my day. We have a building coming up. We had a slab party not too long ago, so the slab's in place. Everything's starting to get ready for the actual walls to go up here soon. So it's real. So I want to give you an update on what the plan is for the building. So you can be as excited as I am for what's going on. Secondly, also exciting, but not necessarily directly tied to that, but in the real estate world, mortgage rates are dropping. We're at 7.01% on the 30-year fixed. That's good news. I know that sounds weird to even say, but yeah, that's where we are. They're dropping in anticipation of the rate cut. So remember, the Fed sets the short-term rate, the market sets the long-term rate based off of that. So we'll peel that back just a little bit for you. And then Mike's going to close with the target earnings were out this morning, and the results may surprise you. So that's what we have for you today. This is a financial education presentation. You have to do your own due diligence for act to comply on anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. And the opinions expressed today are Mike and mine alone. What I'm going to show you first is this is the floor plan of the building. So what's going on here? So if you remember, the whole thing is 3,400 square feet. We bought the whole building. So in the middle of this building, this square here, I don't know if you can see my cursor or not, but yes, the square in the middle there, that's going to be an executive lounge. It's going to be built out very nice. It'll be called the Endgame Lounge. The entry to that will be kind of a Murphy door slash bookcase that will slide open to the sides to kind of reveal, if you will, the kind of secret room behind it. And then the part on top there, that big open space, is going to be a classroom slash huge conference room for us to have clients in, not only for just client events, but to give educational presentations like how to fill out the FAFSA, how to do 529s, what new tax law changes going into or coming out of the election. Anyhow, we have the ability to get to the front of the room and educate everybody at once that can make it in. I know if you live in Maine, you're not going to make it in, but if you're certainly here in Central Texas and you want to come in, this is going to be a really great place for you to come in and meet folks. But that's the Ankerstar Wealth Push. With these two independent offices, one on the left and one on the right, the idea is, and what we're just get started on with the help of our new summer intern, Zach, is we're developing a client list for both CPAs and estate lawyers in the local area. We're starting to reach out to them through LinkedIn and through email, eventually possibly phone calls. We're sending them some form of package in the mail to be able to start a relationship. We found about 40 each. So out of that, we really only need 2 or 3. But we'll see if we can find somebody that's like-minded, that has a small group of people, then these two offices to the side here, in a perfect world, one would be inhabited by a CPA group, small group that's growing, and another one would the other side would be inhabited by an estate lawyer firm that's, again, small, but yet growing. So we'll see if we can find, it's like finding unicorns out there that are not only like you want to work with, but also, best for the clients. So the goal is to have all that expertise under one roof, and then we can come into this main conference room when you come in for your client meetings and actually have all the answers for you right there, instead of the proverbial, I will have to get back to you, or my license stops, just prior to both of the, doing wills or doing your taxes. But if we can bring that expertise in-house, we certainly will. So that's what's going on. Wish us luck on that, because that's not an easy task. All right. Second thing I want to talk about is what's going on in interest rates. And let's go to the tape of CNBC this morning. Here's what we've got. It's weird. You like to see fall to 7-week low. Yes, that is good news. And people are actually refinancing. So the math behind refinancing, everybody's situation is different, but just kind of think conceptually, if you can get a % off of your mortgage, it generally pays to refinance. And again, we're kind of talking the general 30-year mortgage. It's different if you're going from a 30 to a 15-year or making a move like that. But generally, you have a %. As soon as that moves down a %, you want to refinance. The refinancing is not free. The costs are baked into the new loan and then kicked out over 30 years. So it can be a healthy chunk of change, but you just don't feel it. right? And most of the refinancing people are showing you numbers of this will lower your monthly payment. And a lot of people, that's all they care about, not the total amount they're paying over the life of the loan. But my point is, if it drops a quarter point, you do not need to refinance. It will not be financially beneficial for you. You can start making an argument at the half to 3/4 point, but definitely at a full point. And then the follow-on question to that is, why won't I just wait? Well, you're paying the higher amount while you wait. So, and you don't know when rates are going to actually drop. So, I mean, there's a little bit of a gambit there if you wait. But yeah, if you get a percent refi, and then on the way down, if the Fed starts cutting rates, once they break spades on that, I think we're going to see several rate drops. It'll be shocking if they actually just do one and done, because what's the difference between 5.25 and 5? Like nothing, right? So I think once they commit to it, they'll actually make a series of rate drops to kind of spur things. And one of the things that will be spurred will be the refinance market as well as the overall housing market. So that's what I've got for that topic. Mike, let's go over to Target and what people buying groceries at Target. Let's hear all about this.
Well, I think the point is with the earnings is they're not buying groceries at Target, but they did find a picture of somebody buying them.
All right.
Target came out, they missed estimates. Sales fell 3% year over year, as you can see on my screen, and their stock has went downward significantly. It was down as much as 10%, down 7.6% right now. As far as I was looking earlier and they said 20% of Target's revenues come from groceries, as opposed to Walmart. I think I saw 60%. And Walmart stock, if you looked at that lately, they have had some splits, but Walmart has been up. So Target down. So the question I kind of was asking is, are people buying less groceries overall, which is they have less money to spend, or are they buying less groceries at Target and buying more of them at Walmart? That's to be determined. But when you look at the stock prices and the earnings that come out, it sounds like they're shifting to Walmart. I know that when it comes to my grocery shopping, it's Walmart and Kroger, and whoever will deliver them to me, because I prefer not to shop. I have been in Target before to buy some things. Steve said he does buy things at their super Target. And when it comes to earnings, you can see how close it seems. When you say interest rate 5 versus 5.25, it sounds so close. Earnings per share, $2.03 versus $2.06. Sounds kind of close, but the market does not react that way. So here we go. Here's the graph. This is a 6-month graph of Target. So it's back where it was about 4 months ago. I mean, it did go up and peaked out up almost $180 a share, but down to $144. So massive haircut there. Will that come back? I'm sure they're not going out of business or anything. I will say that the economy is slowing. We know the GDP is projected to slow. It feels like it's slowing, but it's still growing. Now, if it starts declining, then we start getting into the recession talk. 3 companies, Target being one of the 3 that at least concern me on the slowing side would be, Target, McDonald's, and Starbucks. I know those aren't, a total pulse of the consumer, but it's not a bad pulse. Although I will say the other day I took my kid through Starbucks and there was like 10 cars ahead of me. I'm like, do you just want to walk in and get it? And she was like, no, let's stand in line or sit in line. So it didn't seem like they were running any shortage of business. But but when we look at overall Target, it's a $66 billion company. So when it drops, 8%, I mean, that's a good, almost 8 billion. So we'll see. Now, of course, what you're really waiting on that we do not have yet, and I don't want to project, is NVIDIA later today. So after the bell, NVIDIA earnings come out. NVIDIA, for your record, if you haven't heard of them, they're the 3rd biggest company behind Apple and Microsoft in market cap. And they did not disappoint 3 months ago with their last earnings. They are riding the AI chip. They are the main player. I mean, the biggest, they've more than doubled in the last year. Huge company, great company. and what their earnings say will cause the markets to move. So if they miss, I would expect many tech holdings to go down. Not as much as they will, but and if they hit, if they go over, I mean, the whole market's going to move higher, is my call. So, anyways, that's what I got for you today, and I'm sure you'll be waiting on pins and needles like we are after hours today.
Yeah, it'll either be 4:05 Eastern or 4:30 Eastern generally are the two big times when that releases. I'll have the TV on and watching, and I'm conflicted, right? I don't know what to hope for. I kind of want them to miss, so everything kind of comes in, so I get the buying opportunity from it. But then again, that does lower values across the book, or just hey, let's have them kick butt and go higher and take everything with it. So we shall see, but we'll certainly be watching this afternoon. So that's all we've got for today. Thank you so much for listening in. We will see you guys back tomorrow morning where we will likely be talking about NVIDIA. We'll talk to you then. Bye.